Traders, hey, it's 11 p.m. on Monday, August the 25th. And as much as I'd like to be hitting the sack right away, I thought I'd first review the market, see what the indices did on Monday, and find out what to be on the lookout for come Tuesday. Let me get started with the Russell 2000 here on a 120-minute time frame. You can easily spot the rounding bottom formation that has a handle associated with it. No, it's not a cup and handle. A cup and handle is usually preceded by an uptrend leading up to the formation. This is a rounding bottom that happens to have a handle. However, the implications are the same. All right? And at its base, this rounding bottom has an inverse head and shoulders. Early last week, we broke above the neckline. The neckline is the line connecting the two armpits. Left shoulder, left armpit, right armpit. We came up and tested the left cup rim. We tested the swing high dating back to July 23rd, right here. So now we have a mature formation, and what happened from there is a handle formed. Everyone made a big deal out of this sell-off late last week, when in fact it was nothing more than a mere back test of the neckline. Buyers jumped at it, drove prices back up towards the cup rim, this yellow dotted line. And then today, Monday, we gapped above it. So this practically confirms the bullish breakout. Now, sure, we are overbought on a short-term basis, but overbought can be diffused or relieved in both price and time. We can move sideways for a little while until the condition, the overbought condition, is relieved, and then we can move on higher. Now look, whether you believe in this inverse HS or the cup, the implications are the same. We can both agree on the fact that there's more upside in the coming. If you are a believer in the inverse HS, your target is the 78.6% retracement off the decline from July 1st through, what was it? Early August, August 1st, whatever. All right, now if you believe in the cup or the rounding bottom, then we are on the way to making new highs. And I happen to be in the latter camp. I believe that new highs are in store. Let me spend a couple more minutes on the Russell 2000. Here's the daily chart showing the Ichimoku cloud system. Now, as I said earlier, this thing is in the process of breaking out of jail. Yes, it's been pretty jittery. You know, every move up has been sold, every dip down has been bought. You know, I think the situation will soon begin to improve, and you're going to start seeing it move higher and sustain these moves. The reason I say this is because for the last few days, you know, the last 5 sessions last week, all these bars opened and closed inside the cloud, And think of the cloud as turbulence. You're flying a plane through turbulence. You either want to fly below the clouds or above them. Today, for the first time, price broke out of the cloud, out of the Kumo. It's called Kumo. but closed right at its edge. This is called the Senkou span A, that orange line. It closed right there. The cloud is support and resistance. So we closed right at its edge. The other positive development is the fact that the Chicago span, this purple line, is moving away from these candles. You don't want it below the candles. You don't want it touching the candles. You want it right out in the open. Out in the open, the blank space. We did get this crossover a few days ago. It's a bullish crossover. When the Tenkan-sen, the green line, crosses over the blue line, the Kijun-sen, it's a bullish crossover. However, it's a weak signal whenever it happens below the cloud. Above the cloud, it's a strong signal. Now, nothing in life is perfect. We have many things positive, and just the fact that this thing happened to cross over below the cloud isn't the end of the world. And I like the fact that both the Tenkan-sen and the Kijun-sen are rising. And eventually I'd like to see them both above the cloud. And I'll show you an example of what happens when everything is picture perfect. Okay? At the same time, what I did on this chart is I drew these two converging black lines to show you that what we have on hand here is a falling wedge. When we broke above the upper trend line of this falling wedge on the 8th, the odds began to favor a return to the highs, because whenever such a breakout occurs, the target technically is the inception point of the wedge, which is the July 1st high. I also drew these two diverging red lines to highlight the presence of a descending broadening wedge. And that's exactly what I've been playing for the last week or two. Once price broke above it last Monday, broke above the upper red trend line, I immediately told you that the target would be the inception point, the starting point of the wedge. And that's exactly what we got today. That's where I booked profit. All right. So things are getting a lot better. And I don't believe the market is ready yet for profit taking. Any sort of dip that we get this week is an opportunity to buy. It's an opportunity to buy. Keep that in mind. Any dip is an opportunity to buy. Let me move on to something else. Next in line is the S&P 500. Now, there's actually quite a bit of information to glean from this chart. Let me show you the two main clues that I uncovered on the 13th of the month, 12 days ago. Two important observations. The first thing that I noticed is the typical sideways movement that precedes, or almost always precedes, a waterfall decline like this one. And I quickly realized that this sideways movement is the lead-in phase of a bump and run chart pattern. Okay. The lead-in phase is really a handle, and then you have this waterfall decline and the U-turn that forms a frying pan. Now close your eyes, imagine yourself holding this frying pan, looking to fry some eggs or whatever. Anyways, look, that 13th was important to me. And this is when I was willing to recognize or interpret this chart pattern as a bump and run for two reasons. Well, if you notice the four preceding candles, 8-7, 8-8, 8-11, 8-12, those four candles form what is called an NR4 pattern. Why? Because the last candle has the smallest body of the four. The full range of this pattern is the lowest low to the highest high. This is the height of this four candle formation. And it's called the NR4 because the last candle has the smallest body of the four. Now, the reason why on the 13th I said what I said, meaning there's an NR4 pattern and the target is what? Twice the height. You take the height, you multiply it by 2, you get to 1985. That's all I saw, but I also knew that the guidelines of a bump and run pattern is the prior high. So not only are we going to 1985, we're going back to the high and maybe beyond. Those were the two important clues. Had you taken my advice on the 13th, you would have realized a 55-point gain by now in just a few days. 1, 2, 3, 4, 5, 6. In 8 days, 55 points on the S&P. All right, let's move on to the Nasdaq. But actually, before I do so, let's talk a little bit about the Ichimoku cloud itself. The Chicago span, the purple line, is above all these candles. Whenever it is in the clear, it's bullish. The Tenkan-sen crossover, or the TK crossover, when the Tenkan-sen crosses over the Kijun-sen, it's bullish. Now, when the crossover happens inside the cloud, it's more or less neutral. But forget that. There's absolutely nothing perfect in this life, including charting systems. So the crossover, in my opinion, was bullish given the context that I gave you earlier, the NR4 and the bump and run. So a crossover sometimes happens below the cloud. They tell you this is a weak crossover. The signal is weak. It's neutral inside the cloud, and it's powerful out above the cloud. Well, not everything is perfect. In the case of the Nasdaq, though, I'm going to show you that it was actually perfect. This is pretty good. Now, price is above the Tenkan-sen, the Kijun-sen, and the Kumo itself, the cloud. Everything seems to be rising. Everything is rising. This is pretty good. The Tenkan-sen also got outside the cloud finally. That's even bullish, more bullish. Price is well above it. Everything is pointing upwards. All right. Now, what's happening in the future because of this cross under, Senkou A crossing under Senkou B, this portends trouble. We'll find out what happens when we get there. Now, anything else? No. Let's move on to the Nasdaq. Where's the Nasdaq? Right here. Now look at this beautiful picture. The Chicago span was way above, or has been way above, all these candles. Nothing is interfering with it. Price never really got down to the cloud. It could have bounced off here, no big deal. And then the crossover actually happened above the cloud itself. You don't see perfection or a perfect situation like this often. So remember what a perfect situation looks like. Okay? All right, what next? The weekly chart of the Nasdaq 100. Now, of all the charts, this is the one that is most surprising to me, because last week it managed to break above the yellow parallel trend channel and close above it. And then this week it gapped up. So I'm starting to doubt whether this 5-wave advance that began in early June 2012 is properly interpreted here. Now, there's really nothing precluding price from breaking out of the channel on the way to the target. And as I said, the black 5-wave structure and the blue 5-wave structure have a common ending zone somewhere between 42.14 and 42.90. So I wonder if we're going to keep rising until we reach this target. On the Nasdaq Composite front, this index is doing exactly what the chart suggested several weeks ago, and that is, it is on the way to fulfilling the crab's objective, which is to reach the crab PRZ somewhere between 46.03 and 46.34. A few days ago, I identified this descending right-angled broadening formation. I measured its height from peak to trough, and I projected that height from the top of the formation to reach this crab PRZ, roughly exceeded a bit. And I also interpreted the rise from the mid-April low as a 5-wave advance in yellow or orange, with the descending right-angled formation being wave 4, a sideways move ahead of the 5th wave. Now, the 5th wave doesn't really have to end at the crab PRZ. It could continue on higher, overshoot the crab PRZ by a bit to reach its ideal target of 46.55. 46.55. And that's pretty much what the broadening formation's measured move is pointing to. Now, important level also is 46.73, so wave 5 could end somewhere between 46.55 and 46.73. Why is 46.73 so important? Because it happens to be the 88.6% retracement of the 2002 crash. And since then, on the monthly chart, you all know from my previous videos that a large harmonic pattern has formed, and this harmonic pattern can either be a bat or a crab. The bat's objective is 46.73, the 88.6% retracement. And this level could catalyze some sort of corrective behavior on the part of the index. But in my opinion, the chart is more of a crab than a bat. It has more of the characteristics of a crab, meaning in the coming years, and I'm saying a couple of years down the road, I believe the ComQ, the Nasdaq Composite, will reach the crab's target on the monthly chart. It will get as high as 7,000 to 7,600. Mark my words. Now here, how long will it take to get to the target? You know that here, right here, the top of this bar labeled 3 in black, if you can really squint and see it. The top of it is TDST resistance right here. Okay. And we blew through TDST resistance when we were only on bar 5 of this TD setup. Now TD setup completed right above TD sequential sell. Actually, this blue line happens to be the stop loss that would invalidate the sell signal. So we blew through it, through TDST resistance. We closed above TD risk associated with this TD sequential sell 13, invalidating the signal altogether. And, you know, I think in the coming weeks, could be 5, 6, 7 weeks, I don't know, we could register a TD combo sell 13. It's the red count. We're on week 8. This is week 9. I don't think this week will count as 9. We'll find out. Actually, yes, it has so far qualified as bar number 9, as long as we don't see anything dramatic this week. If we close above last week's close, then this bar will count as 9, which means we'll need 4 more bars to reach 13. They don't have to be consecutive. They don't have to be consecutive. The black count has to be consecutive, but neither the red or the blue have to be. So I'm going to keep you updated on this, and hopefully if there is any correction on the horizon, we'll be able to catch that near the starting point. All right, that's on the ComQ. On the ComQ's front, this is the daily chart. Now I'm before I wrap this up, I want to look at the Nasdaq 100 one more time. It's hovering around the cup and handles measured move. All right. And I believe, of course, it's got more upside. Let me resize this once and for all. Here we go. Again, here we blew through TDST resistance. All right. When we were still on bar 5. And then bar number 9 completed last Thursday. What was yesterday? Yesterday was Monday. All right, so last Tuesday is when bar number 9 completed. And again, on the red count, as far as the red count is concerned, we will probably register bar number 10 of 13. Okay, we will register, most probably, bar number 10 of a possible 13 non-consecutive TD combo sell countdown series. Now, I believe the yellow channel is valid. I connected the endpoints of waves 2 and 4, and then drew a parallel line to it across the endpoint of wave 3. Okay, follow the blue lines, waves 1, 2, 3, 4, 5. This is how you construct a channel normally. And I feel as if the top of this channel is acting as a magnet. How much of a magnet? Well, let's go back to the bi-hourly chart. Here too, just like in the case of the Russell 2000, we have a nice round formation, but this time I will call this a cup and handle because there is an uptrend preceding the formation. In the case of the Russell, remember what I called it, a rounding bottom with a handle. Okay, you cannot be loose with your chart pattern interpretations, otherwise you will give it too much room for error. You will allow yourself to be wrong by loosening the guidelines. You need to remain stringent on that front. Okay? Now, yesterday I said there is an overbought condition, but guess what? No one seems to want to sell. We're in an uptrend, and overbought can get even more overbought. Now, this formation has a 100% target of 41.48. The 61.8% target, this is where Thomas Bulkowski tells you to book profit, because only approximately 62% of cup and handles actually reach their 100% target. That's why I've been wanting you to keep a close eye on that 40.91 area. All right? But anything in the way of a pullback in the coming hours, anytime this week, is probably a buying opportunity. Now, 41.48, if we do reach this level, when would it be on the daily chart? Now, we're assuming that 41.48 will get hit simultaneously with the top of the channel. It doesn't have to. We just saw in the case of the weekly chart that price actually managed to break above the channel constructed based on the 2+ year advance, the one that began in early June 2012. So, I don't know, probably sometime in early to mid September, we could very well be at the target 41.48 or so. All right, so I think it's all going to come together. Nasdaq reaching its objective, the 100 and the composite. The Russell, remember the Russell is now still the lagging one, and I believe its situation is going to improve tremendously in the coming hours and days. And this could lead the Nasdaq to higher highs, maybe even break above this channel. One more look at the Russell, just to see what the DeMark count is saying. Now, as I suspected, we broke above the descending broadening wedge. We reached its starting point, and I said that 2 weeks ago, that this is what is going to happen. All right, and that was just shy of the 61.8% retracement, and the gap fill right here. Now, if we move above this, if we move past that 1173, 1174 area, where do you think we're going? 1190 and beyond. That's based on what? The hourly chart that I showed you at the start of this video. All right, so stay long, broaden your horizons as far as your options expiry dates. Don't bet too much on weeklies. Give your eggs ample time to hatch. All right, this concludes it, and I will see you in my next video. Have a great day.